Hello, it's Rhonda Thomas, and we're just about to do Financial Accounting Chapter 7's coursework. So let's go ahead and get to it. I'll share my screen. So Chapter 7 is about the cash asset account. Remember, we started going into more in-depth information into assets. We did Chapter 6 is inventory. Now Chapter 7 is cash, okay? Now, the first three I'm going to let you do. One is to learn about using a new account called cash short and over. So those of you who have worked with a cash register or haven't, you put your actual cash in for the cash count, and I'll show you one of these or two in the problems I'm going to do. So do these problems first and then go do 1, 2, and 3 on your own, and I think you'll do better. All right. So, okay, let's go to number 4. We're going to start with a bank reconciliation. Okay, let me bring my spreadsheet over here just a second. All right. So, kind of like the intro videos, the intro basic exercises or intro exercises shows us, this is a comparison or a reconciliation of what the bank says is in the checkbook account or the cash account and what our accounting book says is in the book. All right. So, the reason that there are differences is because of timing and errors. Okay, timing and errors. And if you, I'll make this a little bit smaller, get rid of that thing. Okay. All right. So the first thing you want to do is go find the cash balances, and they're nice. They're right here. All right, so it says cash balance according to the company's records on August 31st. So the book is what I call the company records. And then there's the bank. I always put the bank on the left side and I put the book on the right. All right, so let's go ahead and start with the amount that they are. So the balance for the company's books is $28,740. Okay, the balance according to what the bank statement says is $30,390. Okay, $30,390. So what is the difference? Okay, I'll just and we're just going to compare the balances to start with. So we're just going to take what the bank says and what our book says. So we're off, right? The difference is $1,650. Okay, difference. And once again, the reason for those differences can be a lot of things. Okay, can be timing, can be errors. Timing, which side knew the change in cash? So when we look at the activity going on over here, we'll ask ourselves, which side knew about it? So whichever side knew about it, then the adjustment goes to the other balance. Okay, and then errors. If you find an error, it's whoever side that error occurred on, that's where the adjustment goes. Now, an adjustment can be in either an addition or a subtraction. Okay, the first thing, so let's go ahead and put these totals into, so this is according to the bank statement, and then this is according to the company's records. Okay, so I've got them here and I've got them there. Okay, the first thing that we have is checks outstanding. Okay, who wrote the checks? Well, the company did. The company wrote the checks, so they've already subtracted those from their cash, but the bank hasn't seen them yet. Okay, so we want to put the amount of the outstanding checks, $58.30. And usually when you're doing a bank reconciliation like this, usually you put anything that adds to first and then subtract second. So I'm going to go down here and put cash according to the bank statement. We need to deduct the outstanding checks of, I got 5830, and that's what I put right here, 5830. All right. Then deposits in transit, not recorded by the bank. So who took the deposit to the bank? The company, right? So they already know about that deposit. How much is the deposit? It's $46.80. This is called deposit in transit. Okay, deposit in transit. So even today, when we have all this electronic version, online banking and banking on your phone and everything, you can, if you take a picture of a deposit, and if it's all filled out right, you'll get that deposit in your account. But it depends on where the check's coming from and how much it's for and all of that as to whether you can instantly use those funds. Okay, so sometimes there's a lag between putting money in the bank with certain checks and being able to use it. Okay, because they've got to go make sure, the bank has to make sure that the check is legitimate and it's not a scam. Okay, because anyone can write a check. Whether or not it's legal to process it is another thing. All right, so now we're going to add the deposit in transit to the bank statement. So once again, it is $46.80. Okay, and I'm going to put this in as, I'm going to check it. If this shows that, I'm going to put a negative here and see what happens. Okay, so they do want a negative if it's going to be deducted, right? Okay, so what else? We have a check for $170 in payment of an account that was erroneously recorded in the check register of $710. So this is an error. Okay, who made the error? Well, the check register is the company's records. Yep. So instead of putting a payment in for 170, which is what we made the check out for, we put it in as a check in the amount of $710 in the register. So, a check subtracts from our cash. So we made our cash go down quite a bit more than we needed to. Okay, so this is what I call a good error. Okay, a good error. All right, so now we're going to put the error. Okay, so we're going to add back the difference between 170 and 710. So let me put here in my spreadsheet. So the error is 710. So sometimes establishing which is the error and which is the correct one. So here is the correct. So the error was 710 and it should have been 170. So now I'm going to fix that error. And like I said, you have to understand which direction the error is going. So we took too much out and we're going to put it back. So we're fixing that error of $540. So let's see if we get error in recording check. The reason why we put it first is you're adding back. So there's fixing that error. And then the last piece is a bank debit memo. Now remember, when the bank is looking at our stuff, it's the complete opposite of the way we see it in accounting. All right. Remember, to the bank, your account is a liability because they owe you that. So when you open a checking account and you take cash there, yes, their cash goes up, but they create an account that's a liability to the bank. Okay. And it's because of the bank things that we've been through in our lives that screw us up when it comes to debits and credits for the cash account. Okay? Because we may look at it as cash, but the bank looks at it as a liability. And remember, a liability has a credit normal balance. So how do you make a liability go down? You debit it. All right. So when they debit our account for $40, it's for the service charge of having that checking account, right? Having the checking account. So that's going to be a service charge. So we're going to deduct the bank service charge. So the bank knew about it. And then, so we need to put it in ours. I'm going to put it negative there. Now we can do this in the spreadsheet. I forgot about that. All right, let's go to the spreadsheet. And what are we doing here? Oh, well, you know what? We're not going to worry about this. I guess you copy and paste it. Okay. All right. Okay, let's copy this. So this is according to the company's records. They have those on the bottom. Okay, so here's what I'm going to do. Let's see if we can bring this over and copy and put it in here, because it's the first account listed, right? Yep. Okay, cash. All right, so oops, let me go back. I guess I didn't have to do that. Okay, let's just put the balance in. Okay, the balance for the bank is this one. Okay, they list the bank first. Okay, and then the balance for the book equals, okay, the balance for the book is the top piece, and you just have to look and see how they've given you the information. There's no set way, and I hate to tell you this, but in the real world, there's nobody that's going to put this all in order for you. Okay, it's just not going to happen. So, okay, so there's our beginning balance. So then remember, we're going to put additions in. So let me just put bank balance here. Bank balance on 8/31. Okay, 8/31. That's fine. And then book balance. Book balance. The book is the company. Okay, so it's okay. All right, so then it looks like we have deposits in transit. You can abbreviate. Okay, those amounts are up here. So the deposit in transit adds to it, right? And outstanding checks. Okay, so checks outstanding. So I don't care, you can put OS. They may not like it. OS checks. Those are outstanding checks. We're going to put those in as a negative. So equals a negative and those outstanding checks. Okay. Now we want the adjusted balance. Each side is going to have an adjusted balance. Adjusted balance. All right. So we can just make this add together, and there it is. Okay, now we're going to do this here. Now we had an error. Okay. So this is a book error. Book error. Check for 170 recorded as 710. Okay, so the error is the 710. So we got to get that back straightened out. So here's what we're going to do. We're going to take 710 and subtract 170. And that's going to be adding back $540, right? And then the last one is the service charge from the bank. Okay, service charge, we go negative $40. Okay, now it's time for the adjusted balance. Now remember, we won't do any journal entries for anything that the bank is showing. We don't do anything with these adjustments, but we would with this one. Okay, with these two, we would want to make journal entries so that our cash then balances. Okay, because our cash now needs to be $29,240. Okay, right now our book balance is $28,740. Okay, so and I'm showing you this. So let's go back now. I think we've got this filled out. I don't really care if you can see it. All right, so now we're going to put the amount down. Okay, so and oh, I've got to fix this bank service charge. It's only $40. The last time I did it, it was 50. Okay, so there we got it. And this must balance for it to be reconciled. Okay, must balance to be reconciled. If you can't get it to balance, you've got more work to do. Yep. All right, so let's talk about that error. We wrote a check for $170, but was recorded in the accounting records as 710. So that's a transposition error when you get the wrong order that the number should be in. So here's our error. Here's our correction. So the accounting records needs this added back. Add back to accounting records. So there we go. Add back to accounting records to fix error. So here's what we started with, 28,740. Okay, what we need it to be is the new adjusting balance, right? The new adjusting balance. So that's going to be the 540, correcting that error. We made the error. We have to make the correction. Okay, and then cash is going to go down by the amount of the service charge. Okay, the amount of the service charge. So then our new balance is the beginning that we started with plus the 540 we added back to fix the error minus the service charge. So now our bank balance reflects the new adjustment, right? The new adjusting balance is 29,240, and that's what it is. So balance now agrees with reconciliation amount. Reconciliation amount. Reconciliation balance amount. Balance amount. And that's the point of doing this. All right, so now we have 29,240, 29,240. Okay, if the balance sheet were prepared, what amount would we report on the cash? What would we report for the cash balance? We would report 29,240. And this is a funny question. Must a bank reconciliation always balance? The answer is yes. If you can't get this to balance, and here's what you need, right? To get it to balance, you got to have a zero. Okay, got to have a zero. That zero balance indicates that it is balanced. It wasn't balanced up here because these two numbers have a difference of 1650. But now, once we've made these adjustments to both sides, there is no difference in the balances. All right, so, okay, I think that's all for this one. Yep. Okay, let's move on. Let's go to this one. So now, once again, this is entries for bank reconciliation. So this is a whole new one, I believe. Yep, this is a whole new one. That's all right. good practice. And we don't have an Excel spreadsheet this time. So cash balance according to the company's books, they're on the right, 21,530. The bank balance says 22,710, and this is for August 31st. We have outstanding checks. If you don't have anything else, most of the time, I mean, 99 out of 100, you're going to have some outstanding checks, because especially if you're a business, because there's companies that don't go to the bank every day. Heck, there's employees that carry around their bonus check in their wallet because they don't want to cash it yet, which is not a good idea. It makes more work for the accountant. Go put your check in the bank ASAP before the expiration date comes and goes, and then you don't have the money at all. And go put it in a different account if you're trying to keep it a secret from someone else. Okay, I'm just telling you to have mercy on the accountant and go cash your check. All right, so outstanding. Okay, the outstanding checks are, and I'm going to put these in as a negative because they need to be subtracted from the bank balance. Okay, then we had deposits in transit of 3510. Okay, and then a check for 590 in the payment of an account was erroneously recorded in the check register as 950. So to fix the error, okay, and sometimes you just got to write it down. So the error is 950. They put it in as 950, but the correct amount is that when you actually look at the check, here's how much the check was written for. It was written for 590. You say, how do you get those put down differently? Well, not so much today, because when you write a check, it's not from a software, it's going to record whatever you put in. But back in the paper pencil days, you had to record it again, and sometimes our brains mix up the order of what this should be. So here's the amount, right? So we get to add back some money because we took out too much. So we're going to add back 360. So we're going to fix this error right here. This is the fix. So it's always good to make sure you're understanding the error, who made it, and what direction things are going, because it can get very confusing very fast. All right, there's that. Okay, so now we've got that fix error. We've got a deposit in transit, and then the last is the service charge of 40 bucks. So I'm going to change this to 40, and let me make sure I've got, so the book balance 21,530. The bank balance is 22,710. Our outstanding checks are not the same number as our deposit in transit. So see, I looked at the wrong thing. 4370 is our outstanding checks. Now we balance. Okay, we balance. Okay, that's not what they wanted. What they want is these two items. How are we going to record them? So here's that error again. We wrote a check for 590, but we put it in the accounting records as 950. Okay, so there it is. Doing it again. So the error is 950. The correct amount is 590. So there is the addition to our accounting, addition to our cash, right? We're going to add back. Okay, so our cash, here's fixing that error, is 30 bucks. And let me make sure our cash is 21. Now this is our books. We don't make any journal entries for the bank. They do their own. Okay, so we just have the bank's adjustment just to look at, but we actually do affect our account. So what was once the balance in cash will now have a different balance. Okay, so there is adding back the error. Okay, so let's see which one they want first. So I guess we want to make an increase in cash. So that's the error. So you say, well, where does the credit go? The credit goes because we've paid a vendor. Okay, we paid a vendor and we put it in wrong. So we made it look like we paid them $950 when in fact we paid them $590. So we're going to add, just like we're going to add cash back here, we're going to add this back to accounts payable because we didn't pay as much as we thought we did. Okay, so now we're going to make cash go up and accounts payable go up. Sometimes this is difficult. Okay, so we've got 360 because we have debits must equal credits in any journal. And now we're ready to record the service charge. They said they put the service charge in miscellaneous. All right, so here it is. Okay, so let's just put 40 in here and then we'll make this equal that. So when we make cash go down for 40, we have to debit something. Okay, so we're debiting for the service charge and crediting for the cash going out. So now we have a new balance of, okay, so let's go ahead and calculate, equals the beginning balance plus correction, the fix of the error that we did, and minus the $40 miscellaneous or $40 bank fee. So our new balance is $21,850. Is that what we show here? Yes. So I'm going to show that they are in agreement with the color green. Yep. So there it is. Okay. All right. Let's keep moving. Okay. Actually, okay, this is fine. Yeah, let's go here. Okay, here comes some journal entries. This is, okay, we're not doing this bank balance anymore, so just ignore that. Okay, 23, we're not doing that one anymore. That's okay. We've got 72A. Well, I've got 72B, so let me put B here. Ah, nope. Let me get out of this. What in the world? Okay, hold on. There we go. Oh, Excel. All right. So we're going to do some journal entries involving cash. So here's where you're going to learn about cash short and over. And here's where you're going to learn about petty cash. Okay, so we already learned about it in the intro exercises. Okay, so this is going to be for the month of June. So I'm just going to get rid of all this. Okay, all of this, because this was from a different problem. And sometimes if I try to fill in what was there before, I just get confused. That's all right. So this is the month of June in year 3. We're going to establish a petty cash fund. When you establish a petty cash fund, you decide how much is going to be in this petty cash account, right? It comes out. So let me put June 1st. Okay, so let's put 6/1. Okay, and we're going to make our cash account go down. So we're going to write a check from this account and we're going to go cash it. And then we're going to give it to the petty cash officer who keeps it in a locked box, in a locked drawer, in a locked office, okay, or something. So it needs to be locked up. I don't care how trustworthy your employees are. You're minimizing the temptation, knowing that there's 3 different things that they have to get through to get to that money. All right. Now we're on June 12th. Okay, June 12th. The cash sales for the day. Okay, cash sales for the day. I have a sales account. So whatever the tape says from the cash register, that's going to be our sales, but the actual received is a different amount. So you put the actual received. So I'm going to put 6/12. Yeah, 612 is here. The actual cash, right, is $9,915. The sales register says, or the tape says 612, that it's a little bit different. Sometimes our amounts are off, which means our drawer is either short or long. Okay, so then the cash register tape says 9820. All right, so the difference between the two numbers, right? So our actual cash has more in it than our sales register receipt. So we have, our drawer is long. Okay, it's long. And how much? So you take 99.15 and you subtract 98.20 and you get $92. Okay, $92 is the difference between the actual cash, and you only record the actual cash in the cash account. And then, so our drawer is long, $92, I believe. Oh, hang on a minute. I'll just do it right here. Okay. Now, just so you can see it too, take the amount of cash and subtract the cash register tape amount, and we want this subtracted. So we need to put the cash register here. Okay. Oop, hang on a minute. So now let me sum of these two. So $95. And if it's a positive number, that means that the drawer is long. Okay, so this is actual and register tape. Okay, and then if it's a positive number, it's long. Okay, so we're going to use that cash shorten over. So if it's over, then that's what long means, right? Long means over. Okay, you had too much actual cash. Now that doesn't happen as much. How would that happen? If you didn't give out the right change to a customer. Okay, so then this is going to be 612, and the over part is on the right. So so the over part is 612 and it's $95. So you've got 2 credits that you need to put in. Okay, 2 credits that you need to put in, and then the debit. So let's record these first 2 journal entries. Let's establish that petty cash of $1,200. So $1,200 gets a debit, and the cash account, that's where we write the check from, and we give that to the petty cash officer. They go cash it. They keep that $1,200 safe until someone needs it. Okay, then the next one, let's put the cash, the total cash, actual cash in. Okay, and then we want cash shorten over, and we need a credit, and then we need sales. Okay, because we needed the extra credit. Okay, so this is 9820. Okay, let's check our work, make sure we're right. Okay, okay, now the next part is to do what's called a petty cash reconciliation. Okay, petty cash reconciliation. So how much is in petty cash? $1,200, right? Let's put down how much is on hand. So I've got $46 on hand. Okay, replenish the petty cash fund for the following disbursements. So this is what we spent. This is what we spent the money on when we gave somebody money to go get something. Now be careful. Store supplies. Store supplies, it looks like there's only one. Okay, only one. So it's $390. How about delivery expense? delivery expense. I'm looking. So they tell you where to put it. Okay, so express charges on merchandise. Ah, there it is. Okay, so instead of delivery expense, this is inventory. Okay, inventory, because they're the ones paying for the shipping. All right, so express charges on the merchandise purchased. So there's $140, okay, that we paid the shipping on. And then we have another amount. There it is, June 28th. Express charges on the merchandise purchased. So that's going to be $120. So you have two amounts that go in inventory. Then you have office supplies. All right. So office supplies, be careful, is 105, 120, 35 for stamps. Okay. And so office supplies, 1, 2, 3. Then we have, all right, so let me bring this up here. Okay, so we only have office supplies, 1, 2, 3. Okay, let's do that again. 1, 2, 3. Okay, now we're doing 1, 2, 3 miscellaneous expense. I'm going to put those down. $115 and $80 and 10. Okay, so how much have we accounted for? We've accounted for $1,161. How much is it supposed to be? Okay, it's supposed to be $1,200. Okay, so how much is it short? So the amount is the full amount of the cash, petty cash, and subtract what we just accounted for. So we're short $39. Okay, so what we want, just to double check our math, is to add those two together. Hang on, let me fix this. So we're going to do sum, open parentheses, just add these two together, and there's your 1,200. Okay, so it, right, and we've got to put money back into we got to put money back, okay, to account for check written from cash account. All right, so how much is it going to take to replenish, right, to replenish the drawer? Okay, the drawer. Okay, so if, just a minute, that's what we accounted for. But what is the difference? Okay, what is the difference? So the difference is right here, 1154, and that's what this should be. Okay, so let me see if I have written something down incorrectly, because we should be able to account for the same amount. Because we got to write a check to bring us back up to $1,200 in cash. So let me see, 390. So cash on hand is 46, 390, 140, 105. Let's get this down right. 105. Oh, okay, inventory is 140. That's June 10th. And then June 28th, right? There's inventory. Office supplies is 105, 120, and 35. Yep. Miscellaneous admin expense is $115, $80, $10. Okay, so then here's how much we've accounted for, right? Accounted for. So that's what we have receipts for. Accounted for with receipts. Okay, sometimes petty cash gets off short and over, accounted for with receipts. Okay, there it is. Accounted for with receipts. So now let's see how much we should account for. So we should account for 1154. 1154 and okay, hang on a minute. I am going to take a look what's going on. Okay, so one more time. We've got a petty cash fund of $1,200. We have this on hand. So this does not need to be, we didn't use all the petty cash fund. Okay, we did not use all the petty cash fund. We used everything you see here, right? So the amount that the check needs to be written for to bring this back to a full drawer of 1,200 is 1154. And you say, how'd you get that number? You take how much is supposed to be in the petty cash box versus how much still is there. So we've got $46. If we didn't have the $46, we'd have to come up with the full 1,200 again. But we only need a check in the amount of 1154 to go to write out so that the petty cash officer can go get that cashed, and then there'll be $1,200 back in the drawer. So here comes the amount, right? So if this is the check, this check is going to be written from the cash account, $11,054. So everything then we put in as a debit, okay, is going to, all right, so we got store supplies. So let me go ahead and put this in. I don't think we have this one. We have inventory. Yeah, we have inventory for this. So let me go back. Let's do inventory. All right, and that's going to have a debit balance. All right, so we wrote everything down. So 390, right? And this is a reconciliation of the cash account. So this happens on June 30th. So let's put up here, this is going to be June 30th. So we're going to make the cash go down by the amount we need so that $1,200 is back in the drawer. There it is. And it's coming out of the regular cash account. And I know that's kind of confusing, but it's coming out of there. So then the rest of the debits. So let's go down here and put cash. And we'll put $1,154. Okay, so once again, we have store supplies of $390. And this is going to be on 6/30. Okay, and then we have inventory gets an amount for two of those, two. Okay, so let me put this in here, 6/30. Okay, and this is going to be this number plus this number. Okay, then we need to record one for, all right, so the first one is store supplies for $390. And then we have inventory for $260. That's both of those amounts together. Then we're going to do an office supplies. Okay, so we need to add those three together. Okay, and like I said, I'm just putting in the dates here so we can watch this happen. All right, so here we go. We're going to add 105 plus 120 plus 35. Okay, so that's 260. Okay, yep, I guess both of those amounts are 260. All right, so we're going to record this as office supplies, 260. And then the last one is going to be miscellaneous admin expense, not revenue. And that is going to be these three. Okay, so let's add these three together, equals sum, open parentheses, and we'll just click and drag through these and hit enter. So 205. Now we have one left. Okay. According to what we figured here, cash short and over, we are short. Yep, we're short. So when cash is short, you put it in as a debit. Cash short and over. It's 39 bucks. I don't know, and it all depends on the policy of a company, how short something can be before somebody starts questioning what happened. $39 may not be all that much. But I would imagine that from that point on, if the drawer continues to be short, things will be looked into. All right. Okay. So now we're ready for June 30th. So the cash sales for the day. So we're going to do another cash sale for the day up here. Okay. So it's going to be 630. So there's going to be something go in cash, and that's the actual amount. It's 11,375. And the sales is going to be for what the cash register tape says. And this should just, nope, we got to put in what it says. We got to have debits equal credits, but this one is 11,375. That is the cash register sales. Okay, so I've got this wrong. It's 11,440. Other way. 11,440 is what the cash register sales say, and the actual cash count, where you actually count it, 11,375. Okay, so there's a difference, right? So this time, instead of being over, it's going to be short. So we're just going to take this, bring it down, and put this in here. Okay, so once again, the actual is 11,375. The sales are 11,440. And I've got to put a negative in for this so that it knows to subtract it. So it is short. Okay, if a negative number shows up, it's short. Okay, and short goes on this side. So we're going to put 630. And it's $65. $65 short. Okay, so let's do that. Here comes the actual amount of cash that we counted at the end of the day, 11,375. I'm going to go get sales. Okay, it's 11,440, and we need a debit of 65 because this time we're short. So short and over goes in on the same account. Once again, short is the debit and long is the credit. Okay, so I'm going to also put the word long there. Some people use the word long, some people use the word short. Okay, last entry. The last entry is the only time petty cash, notice, the only time we worked with petty cash, the account itself, was when we established it. Okay, now on June 30th, they actually think they need to keep more. So they're going to increase the petty cash fund by 50 bucks. So we're going to use that same entry that we did to create the petty cash. So up goes petty cash by 50 bucks, and up goes, or I'm sorry, down goes the real cash account, because we're writing another check from this cash account. And I will put 50 bucks here. And I don't think we got a balance to begin with anyway. So $50 here, and petty cash is going up $50. And this is going to be on 6/30, because at the end of the month, they decided they needed to keep more. Because they got down to what, 46 bucks? Yeah. So 46 bucks, I guess, is cutting it a little too close to keep. All right, last one is another bank reconciliation. Okay, another bank reconciliation. Okay, so let's go ahead and start filling this in. We got the bank on the left and the book on the right, and this is 3B. Okay, 3B. So let me put B in. All right, and I don't remember if I did that up here or not. Yeah, I did. All right, okay. So the bank balance. Now this is a little more to it, all right? The bank balance, actually the book balance, okay? The book balance is 11,160. So I'm going to put that in right here, 11,160. There it is. And then the bank balance is 13,960. So I'm going to start that off, 13,960. Yep. And so then I want that to show here, 13,960. So right now, before we do anything else, what are we off? Okay, so the bank says we have more than what the book says. So the difference between the two is 2,800 bucks. So when we get done down here, we should balance. Right now, we're not. Okay, so let's go through them. Let's go through them. So the first one is outstanding checks. Who knows about them? The book knows about them. So they need to be adjusted on the book side or bank side. All right. So we're going to make them go. They're going to be subtracted. Okay. Outstanding checks. So we're looking at 5,030 bucks. Outstanding checks. So that is going to be an adjustment. Okay. To the bank. So that's going to be a subtraction. It's going to be a deduction for your outstanding checks. Do they want us to put them in? I think so. I think they want them as a negative. So we got 5,030 bucks. Let me just check it. Okay. Yep. So they do want negatives where there is negatives, even though they say deduct. That's all right. Okay. So that's that. Deposit of was made too late to appear on the bank statement. So that's a deposit in transit at 5240. 5240. So we're going to put 5240 here and make the bank balance go up by deposit in transit and 5240. Okay. The bank had collected $2,720 on a note left for collection. The face of the note was $25.80. So the bank did this. So the book, right? The book needs to know. So they collected this payment. Okay. Now be careful. The total payment was $2,720. But the face, okay, so I'm just going to put it all in here. The note is $27.20, and that includes the interest. So we will have to make a journal entry a little different for that one. Okay. Okay. A check for $800 returned with the statement had been incorrectly recorded by Stone Systems. So they wrote a check in the correct amount of 800 bucks. Okay. So here's the company error. They wrote a check for $800, but they recorded it in their books as $880. Okay, they recorded it in their books of $880. Okay, so that's an $80 difference. So what's the error? It's $880. The correct is $800. So we need $80 back. So we're going to add. That's a good error. We're going to add that amount back to our books. Okay, so let's go here. Let's do, I think, an error. Ooh. Nope. Let me get the right one. Just a minute. Okay, let's go to the next one. I'm going to just leave that one blank. Let's go to this one. Bank error. Huh, that's funny. Wait a minute. Oh, here it is. error in recording check by Stone System. So we're going to add back 80 bucks. Okay, so our book error equals this $80. Yep, there's the book error. Okay, now here comes a bank error. A check drawn for $300 had been incorrectly charged by the bank as 30. So somebody left off a zero when they entered it at the bank. But we meant it to be paid for 300, and that's what it needs to be done, right? So here comes the bank error. A check written for $300 was charged by the bank for just 30, right? Yep. So here's the error. Here's the correct amount. So the bank balance actually needs $270 more pulled out. So here is your negative to your bank balance. So here is the error. Okay, here it is. The bank error in charging check as $30 instead of 300. So see, that's hard to understand. Yeah. So we need to subtract 270 because the check was meant to be paid for 300, not 30. So they left off a zero. So I'll put left off zero, left off the last zero in 300. Yep. Okay. All right. So it looks like we're good here. We have one more or two here. So now let's see. And I forgot to adjust it for the note. Okay, the note collected plus the interest is $27.20. Yep. Okay, and then our bank error, I need it to reflect the right amount. And then I need to make sure that and that, and then now notice I'm off, right? I am off. So I've got to figure out what I've done, okay? Because that can't be off. And when I go to put things in here, okay, the subtraction is going to be the service charge. I think it's the service charge. I haven't, it's 60 bucks. Yep, because I'm off 20 bucks. Here's where I didn't make the change. So now I will. And now we balance. Okay, so now the service charge will be deducted because the bank knew about it first. So we've got to deduct it here. All right, so then we have a total of our outstanding, our deducts, right? Our deducts total $5,300. So let's put 5,300. So we're going to add, there's an adjustment, there's an addition, and then there's a deduction. So the new adjusted balance should be $13,900 because that's what it shows here. And then that service charge is 60 bucks. Sorry about that. And then we need to add the two additions together, and those add up to $2,800. $2,800. And so we balance now to $13,900. So I think we've got that right. And now we have to worry about what's over here. We've got 1, 2, 3 things. So we're going, so cash has a balance of $11,160. So let me make that equal what's up there. Then we need to add our note collected. Okay, and then we need to add our error. And then we need to subtract our service fee. Okay, so this is how these entries are going to change the beginning balance to the right ending balance. Now we got to put them in the right place, the credits or the, whatever we need, debit or credit. All right. So I'm going to start with the note. Now the note The reason why they told you how much the interest was in the note, I'm gonna go back up. So it says the face amount, okay, the face amount is $25.80, okay? So that means the interest in that payment is $140. Well, they don't go in the same place. I wish they wouldn't have used this because we haven't gone over this at all. Okay, so down goes the receivable for the amount that they're telling you, right? So the collected the note, the face of the note, the face is $25.80. So that's the principal. Okay, so that's the principal. We don't know what notes receivable has in it, but we just know notes receivable is going down by the amount that we calculated. So that is the $25.80. Okay, and then we're going to record the $140 as interest revenue. Yep, I know that's tough. That is tough. Okay, what else? And then what else? The error. Okay, we got to adjust the error. So here's the 80. Okay, the 80 goes here. So when we recorded it as too much, that was for, okay, so this was our error. A check for 800 returned with the statement had been incorrectly recorded by the company as 880. The check was for the payment of an obligation to Holland for the purchase of office supplies on account. So we thought we paid, we put too much. We put that check in for too much. So it pulled out more cash than it should have. It pulled out 880 by putting it in wrong. So we're putting the cash back. When we put this cash back, the offset will go back to the vendor's accounts payable. Okay, accounts payable. So then we want this to be that $60 service fee. Okay, and I've got that right there. I just want it to be, I want it to be a credit. That way you don't see a negative or a positive, because the negatives and the positives happen whether you debit or you credit. Then the last one is miscellaneous expense, and that's the amount of the service charge. All right, so now let's put this together. Yikes. So we have three things that affected. So let's start with the cash. Cash is going to go up the full amount of the note, $2,720. Okay, and that is made up of, let me see, I don't think they broke them up. Okay, no. Oh my goodness, sorry, cash. Okay, nope. Okay, that's not, I think this is added together. Okay, cash is going to go up by the added amount of $2,800. $2,800. Let's see if this is right. Okay, and what made that go up? Well, there's two entries from the note and one entry to correct that error. Okay, so then this is going to be notes receivable for the face, right? So this is $25.80 right here. And then the interest is interest revenue to go with it. The $140 is the interest. Those get broken up, and you don't know that because we haven't talked about that yet. And then the last one is accounts payable going back up for the error we made on that check. Okay, error we made on the check. Then the last one is going to be a miscellaneous expense of $60, and down goes cash for that service charge. Okay, so once again, when we reconcile to a certain balance. That balance turned out to be $13,900. And I want to make sure that I put that in. Yes, yes. Okay, $13,900. And we had 3 different items that made an adjustment to our balance. And when we got ready, there were 3 things that caused cash to go up. That was the note and its interest and fixing that error. Okay, so we combined the whole amount that cash went up, and then we recorded. So this was a note from somebody that borrowed money from us. So we had it in as a notes receivable. Okay, and when we receive a note payment from somebody that we've loaned money to, there's usually interest involved, and interest in the part that's interest goes in a different account. Okay, that's it, folks. You have 3 to do here, and look for the short and over. I guess I forgot to check my work on this one. Okay, look for, I know 2 of these have you go through the journal entry for a cash register. So if you'll refer to this one on how we did it, it should help you. Okay, that's all I've got for now. So I'm gonna get out of here. All right, and end the meeting or end the video. Stop share, say goodbye. We'll see you on the next video.